Well, friends, welcome to ShareTreck. This is Raj here. This video is my daily market update video, and there are some critical points that I want to talk about today because the market seems a bit dicey right now. And I was hoping that the first 2 days of trading in this year would be upward, and I could sell some of my profitable positions and wait for the market to fall down. I was expecting the bottom to be somewhere around end of February and middle of March, that time frame when I can pick it up again, and then the market will start moving up. That was my thought process, because I think around March or something we'd get to know about the first rate cut, whether it happens or not. So we'll be that was my game plan. I couldn't sell my shares today because the market started falling. The share that I wanted to dispose of most was FNGU, on which it was profitable, but today FNGU lost big time. And by the time I got to the trading terminal, it was too late. So I have a negative position on FNGU, but I still have cash which I'm sitting on. I could dollar cost average down on FNGU if it weren't for the fact that I still think February and March are going to be the bottom of the year, 2024. And after that, things will pick up. So I don't see any point in dollar cost averaging right now. I'd rather wait and see what happens. So that's my plan. But I'm seeing some themes in the technicals. I want to share that with you guys and get to know what you guys think about it. That said, let's get started. Welcome back, friends. I think first let us have a look at the fear and greed index and see where we stand today. I think we would have come out of extreme greed and gone into somewhere around greed, because there is still a lot of froth in the market. So I think we should be in greed. Let us check it out. Well, friends, Anderson Cooper is staring at me. It makes me uncomfortable. But we can quickly see that the extreme greed is where we are in the market at 76. Not much changed. Next, let us look at the stock market heat map, and you can see that there has been rotation taking place. Money has gone into the healthcare sector, consumer defensive, real estate, energy, and banks. And the money has gone out of technology and the Magnificent Seven because all of those are in the red. That said, now let's go on to our TradingView platform and look at the price action. And I'm looking at the Nasdaq Futures here, and the Nasdaq Futures have fallen below a key support level of 16,765. So I'm going to mark this as a resistance. And post-market also, we are down minus 0.05%. And as I tell you, friends, 0.05, 0.07, I think anything below 0.10 I would consider negligible. It can change on a dime. But what is concerning me here is that we have started to fall below the 9-day exponential moving average. So that is the first problem for me. Second problem is many stocks are now fallen below the 20-day exponential moving average, which is this orange line that you see on the screen here. This is the 20-day exponential moving average. And that is very concerning, because if we start falling below this every subsequent exponential moving average, the price chart becomes that much weaker. And one thing heartening me is that we are still above average in our momentum. So that's a good sign, but we are flat. The momentum is flat. So there is a bit of indecision out there, which way to go, whether to go down or up. So people are staying flat. So that's the way I read it. And also our MACD is very bearish. So that's the bad part of it. But I'm thinking that we'll see what happens tomorrow. Tomorrow could be another day. It's all a game of sentiments. And if we were to go and have a look at our QQQ, we lost around 1.69% today. And when I say today, I'm talking about 2nd of January, the first trading day of the year. And at this point of time, we are below our horizontal support of 406.75. So reluctantly, I have to mark it red as a resistance. And we are also below our 9-day exponential moving average. And fortunately for us, QQQ bounced back, not only from the line of support here, the box of support here. There is a lot of purchase demand out here. So it jumped up. But it's also been supported by the 20-day exponential moving average, which is this orange line that you see here. That has been a big support, but you see the momentum has fallen very sharply. Fortunately for us, this is still above average momentum. As long as it remains above average, I'm more optimistic. MACD is also bearish. Hopefully this needs to turn around before it goes below average, then we'll have a problem. I didn't expect the markets to fall so quickly in the new year, but there could be some kind of profit taking or something happening out there, or rotation in and out of various sectors. We'll find that out soon. And when we look at VIX, we can see that it had a big spike in the morning and then it came down, and it was in a very narrow range throughout the day. And I think the support from the 9-day and the 20-day exponential moving average is the converse of what we saw with QQQ and Nasdaq Futures. So things are starting to get a little bit volatile for us, my friends. So we have to be very, very careful. S&P 500 has dropped below the 9-day exponential moving average, but fortunately we have a support here at 470.94, which is bouncing it back. And after that we have the 20-day exponential moving average. So those two supports are there for us for S&P 500. And then if you look at Dow Jones Industrial Average, the 9-day exponential moving average is valiantly trying to support it. The 9-day exponential is at 374.98, whereas Dow Jones is at 377.09. So it's a very, very small amount of gap available. And hopefully the 9-day holds, and that will be the first positive sign for us. Unfortunately for us, the momentum is way above, and the RSI is overheated. So there has got to be a little bit of cooling. Any amount of sideways movement would be fine. US dollar index has started raising, and friends, there is a very, very direct connection between US dollar index raising and another factor that happens in the market, which is the treasury yields. Treasury starts here on back foot as global rate cut bets ease. So what it means is that when the rate cut expectations go down, then US treasury yields will rise sharply. And when the US treasury yields rise sharply, money goes into bonds as compared to staying in stocks. So there is that action also which is happening in the background. So that's the converse of US dollar going up. It's the other way around. And it has already got support from the 9-day exponential average, and it is looking for support from the 20-day exponential average. So the themes are all reflecting each other, point and counterpoint. And if you look at the momentum, it is below average and flat, and MACD is bullish. So we have to see what happens tomorrow. I don't have a idea which direction it's going to go, but if rate expectations are smoothened out, then things should be better. For that, as I mentioned, Wednesday is a crucial day, which is when we'll get some ADP data and all that, and that could ease the rate issue, or it could exacerbate it. So we are going through a critical period right now, much earlier than I thought at the beginning of the year. And Russell Industrial Average has also gone below 9-day exponential moving average, but it has got some good support at 196.61, and then at the 20-day exponential moving average, which is this orange line, at 195.35. That said, US oil is going down, and US oil is going down also because the Red Sea issue is being handled very proactively by the US government, and it has deployed resources to keep the area safe, and attacks have dropped. But this morning, I think we had news of Iranian warship getting into that area. I think it's just saber rattling out there. Nobody's going to fight with anybody, and the market realizes that. So there is a bit of calm. Oil prices have fallen, and if you look at put-call ratio, it is moderately bearish. So put-call ratio indicates that the market is a bit bearish at this point of time. And if I look at the 50-day average, companies in S&P 500 whose price is above their 50-day average, we still have broad-based support out here. I mean, it's at 91.25%. So the support is broad-based, RSI is overheated. So probably there's going to be a bit of a cooling down, and this gives me hope that tomorrow we should be seeing S&P doing better, and there could be some better sentiments in the market. That said, I want to go to the Magnificent Five. I'll start with FNGU, which is where I had the biggest setback today. But the dangerous things that I see out here are the falling below the 9-day exponential moving average and the 20-day exponential moving average. These two have really got me seriously concerned about the strength of this rally. And then we have this horizontal line of support at 212.90, which has helped the price to bounce back. That gives me hope. And also, I'm looking at a potential extra support out here. If I draw this line, so This was a support line that we did not draw before, but if we had drawn this support line before, we would see that the price action today has fallen below even that support line. So that's another matter of concern for me. And momentum has gone just up to average. So tomorrow, if it doesn't turn around, I think FNGU will blast its way down very fast because it is XXX leverage. So it raises fast and it falls fast. So I'm concerned about that. And if you look at the individual components, the Microsoft, the Magnificent 7, Microsoft was down 1.37% and it has broken down below the 9-day and the 20-day exponential moving average. Friends, this is not good. And it's also has got just about average momentum, bearish MACD. I'm not liking it. Meta is also down. It's gone down below the 9-day exponential moving average, but not below the 20-day exponential moving average. So that I think is good. MACD is still bullish and momentum is still above average. That is good. Amazon is down 1.32% and the MACD as well as the RSI, both of them and the momentum, they are not telling a great story. And the fact that we have fallen below the 9-day exponential and the 20-day exponential moving average makes me feel that the chart is getting weaker by the day. And if you look at Netflix, again, it has dropped 3.78% and MACD is bearish. Momentum has already fallen below average. We are already below 9-day and 20-day exponential moving average. And it has all happened so very quickly. And we are now tracking the 50-day exponential moving average, which is our next support for us. And I'll also draw another line of support out here, which I think should help us out. And that is going to be here. So it's going to be at 446.82. And then we have Google, which has dropped below its 9-day exponential moving average, very narrow trading, a doji candle. I wouldn't say a doji, it's more like a sword. And then it will bounce back from the 20-day exponential moving average. Momentum is above average, MACD is bullish. So I'm hopeful that Google will be able to pick up. And let me draw a line of support out here, which I had not drawn before. We need to draw these so that we know where our bull channel is. So I'm going to take this across from here and draw it here. So this is our bull channel. So these are the supports. And next, if we go to Apple, Apple has also dropped big time. It's below the 9-day, 20-day, and as well as the 50-day exponential moving average. And it is currently being supported by the 100-day exponential moving average. Not looking good, my friends. Apple is not looking good. It's dropped very rapidly. There's a huge gap down. And the gap down has to be filled up. So that will be a natural bullish catalyst for it for tomorrow. But the momentum has dropped significantly. Now, NVIDIA is the other leg of the Magnificent 7, and NVIDIA dropped 2.73%, a good buying opportunity, I would say. But I'll definitely say that we have lost the target of the cup and handle, which was 542.39, which was difficult anyway. We were at all-time highs, but now that chance is totally gone. Momentum is still just at average, so tomorrow we could see a turnaround. That's very much a possibility. Now let's go on to genomics. And in genomics, Allogene has done extremely well. And friends, we dropped the ball. I dropped the ball. I did not understand the significance of this news article. I kept seeing 9th December and just ignored it. But this is big deal, my friends. I'm going to do a separate video on this probably tomorrow. So watch out for it. They have a lymphodepletion agent. This is big news for CAR-T therapies, and they could get a lot of money out of this. And that's why you can see a huge jump in their share price, and market is starting to notice that. And this share is moving from strength to strength. So we have to do a segment on ALLO. I'll do it tomorrow, I promise. Bluebird Bio is up 6.52%. It's starting to show some signs of life with the momentum picking up. Bionanogenomics is up 5.82%. I mentioned yesterday that Bionano was the biggest loser and then it's gone up again. I said that there will be a turnaround. It has happened. And despite the negative article from Seeking Alpha, which many people read, CRISPR has put up 5.53% because CRISPR is not just Casgevy. It is Casgevy plus CAR-T plus VCTX plus all the alliances it has got and the broad pipeline which it has got, which it is trying to find partners for. So all those things put together and a strong balance sheet and a great management. So it's a whole lot of things. So we can't just be bean counters and say that CRISPR has to be downgraded. So I think that's the thesis out there. You should watch my video on CRISPR. It's releasing today. That it's already released or you're going to see it shortly today. Next is IMTX, which was up 1.80%. NTLA was up 1.08%, and it is still supported by the diagonal line of support. And we have Beam, which was up 0.70%. And all of them have fallen below the 9-day and the 20-day exponential moving average. So they're all looking weak. And we have VERV, which is up 0.43%. Again, it's below the 9-day exponential moving average and it's looking weak. And if you look at ARKG, it was down minus 0.27%, just about managing to stay above the 9-day exponential moving average. Prime Medicine down 1.13%, fallen below the 9-day exponential moving average. Illumina down minus 1.17%. It has just about managed to stay above the 9-day exponential moving average and is being supported by the 100-day exponential moving average, which is this yellow line. So I think there is a golden cross out here, which is a positive sign. But we just want to avoid any death crosses coming in. So we'll watch this carefully. Momentum is also pretty high. MACD is also bullish. Illumina can turn around tomorrow. DNA is looking weak, minus 1.18%. It's a green doji candle, and there has been a lot of trading in a narrow range. And we have the support from the 100-day as well as the 20-day exponential moving average, but it has fallen below the 9-day exponential moving average. The next support for it is 1.64. Eritas was down 1.48%. It has fallen below this diagonal line of support that we tried to draw yesterday. It's below the 9-day and the 20-day exponential moving average. Momentum is below average. MACD is bearish. Eritas is looking weak right now. NVTA was down minus 2.23%, below all the exponential moving averages. Momentum is just about average, and MACD is about to cross over to the bearish side. NVTA is looking weak right now. And PACB is down 2.24%. It has fallen below the 200-day exponential moving average, supported by the 20-day exponential moving average. And momentum is still above average, so I'm hopeful. And MACD is just turned bearish. Caribou Biosciences was down 2.79%. It's below the three exponential moving averages, and it's currently being supported by the 100-day exponential moving average, which is this green line, and the diagonal line of support from the previous bear channel. Not at all looking good, my friends. So that's what I have here. And I think you should have a look at my video on CRISPR Therapeutics based on an article from Seeking Alpha, where I dispute their findings, and I don't think CRISPR Therapeutics should be downgraded, because CRISPR Therapeutics is more than just Cas-JV. So please check out that video. It may release after this, and please give me your feedback on it. It's a must-watch video in my opinion. And with that, I would like to end this video. Thanks and have a great day, and bye for now.